Hey everybody, Day Trader Rockstar here, and this is the edition of Market Radar for the week of May. I was going to name the video, how to trade the debt ceiling debacle. Sometimes you say a word, it doesn't sound right. The big debacle. Anyway, let's move on from that before I butcher any more words. I want to just keep this going because I have a lot of thoughts in my mind, and this is kind of going into next week where we're going to have continued talks about the debt ceiling, and the debt ceiling is going to be in the news every single day as we get closer to it. And the one thing I will tell you from my experience, and for those out there, let me introduce myself. Day Trader Rockstar here from daytraderradio.com. And it's a Friday night, and I just put out a watch list for the HPS watch list for our members here at Day Trading Radio, and it goes over stocks and stuff. But I do a separate video that I try to put out to the public, and it's called Market Radar. And it really just takes a look at the S&P and the overall, take a technical and fundamental, well, more of a technical look, chartist look, support and resistance. So especially we use what I call the high probability methodology, and we apply that to all time frames. So if I'm trading divergences on this 1 minute time frame, I'll still look for those divergences on a daily time frame, maybe on something else. So the strategies are very sound and very productive. They're perfect. And I say this in so many videos that I put out there. The weak link in the trading method here is the individual trader, not being patient enough, not having enough discipline, not understanding the markets, and getting themselves in a position where they're over trading, revenge trading, or the combination of any of those, or a hybrid of any of those. I mean, trading is you got to think there's robots here. There's underlying orders. People know where orders are placed. There's a lot of manipulation, and it really has to be defined on what time frame you want to trade. And if you want to trade a certain time frame, then apply the rules to that time frame. Don't start to smoke the hopium. The hopium is something that all traders do when they get into a position. They're deciding, all right, should I take profits here, or should I hope that it goes high? Next thing it's pulling back, and next thing they gave up their profits, right? This is an example right now. You get out, boom, oh, this is going to go all the way, and all of a sudden it's like, I'm back to break even. I got to give it a little more time. I broke down. We're going to go now, and then you drop, I'm underwater, now I got to hold it. That whole inner struggle of traders. As a trader, you have to get through that. You have to develop that discipline and understand that this is you're going to be a machine trading. This is a business. You're looking for a certain setup. You're going to find that setup. You're going to take it. You're going to take profits. You're going to move on to the next one. All right. Here's a 44 divergent. Well, no, let's not even go there. I'm not going to get sidetracked. Again, we're going to talk about the Market Radar for next week, and I have to say the big Fed, or the debt limit ceiling, the debt ceiling, and how it's coming down to the final days. And this has happened before in history. And I wrote up a little thing that I'll attach to the video so you can read in the comments. Just my experience through this and how I feel, and just to kind of tell you here in an edited version here. Is just, I've seen this before, and when you see things over and over again, the results are not the same. I don't know if we're going to get that. Take it that we default. That's something new, and that would be considered a true black swan event. But other things that going through this debt ceiling deadline, that's been done before. The market knows how to react to that and knows how to price in stuff. So I won't put too much into that. Anyway, let's move on. Let's take a look at the markets going into next week, with the caveat that we have debt ceiling talks, and this thing does not look good for the market. Any way you look at it, it's just a difficult time. Let's take a look at the. This is a daily chart, and if you could actually see how choppy this has been. Up, down, 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 up, sideways, down. It has been. We go out the whole year, going all the way back down to May last year. We're at the same level. We're at the same exact level, starting off May, probably to the day, just about. In June, we were right here. May, June, we were right here. If we go all the way back here, this big black line up here, that's important. That's my breakout level. That's a good level to watch. And then we have this blue line down here. That's a retracement area from an old channel. And you have some space here, and with the news out there, it could go either way, and I'm going to predict which way it's going to go and how to predict the news is going to play out, and I'm not going to get political on you either. It is something the market always it's the market's political pawn in this case, and we could get a shakeout. So my advice right now is to stay nimble. If you're going to get, on the watch list this week, we looked at some quality names that had very good fundamentals, low PEs and low PEG ratios. Also, they were perfect patterns. And then, reviewing the ones that we've been in, all those worked out at the same level. So I'm liking the next selection. But, again, any bad news or we come close to default, and then what happens if we do default? I don't know. All right, I don't think anybody really knows. You're an optimist or a pessimist. You might think it's gonna work out. I do believe that things are gonna work out. But this is an awful chop for swing traders. Awful chop for option traders in lots of cases. All right, let's take a look at that's the daily right now. So the big black line is 4,200. Good news. Maybe we get through it. We have a little rally at that point. We're kind of in a good area up here that could go all the way up if we wanted to. A lot of people are already here, the talking heads, saying if this resolves itself when we get a pop, you should sell the pop, and it's going to be a big fake out. Everything's a fake out these days. There's a default that we spike down. That's probably going to be a fake out because they're going to probably, they're not going to keep it defaulted. They're going to, test the waters, and then they're going to fix it. And they're going to say, all right, they're out of default. We're paying our bills, and it'll be over. And in a day, it'll be over. They'll default for a day. Everyone will get crazy. The market will be down, and then they'll change their mind and say, oh, we come to a compromise, and we will be able to pay the bills. Default off, and then the market reverses. So I'm not going to deal with all that. Exactly. You just wrote the script for it. That's the script. We are going to default. We are going to default for a day or two. You heard it here first. At least I have it on tape. This is 8:47 p.m. May 12th, Friday, doing the market radar for the next week here. And yes, I do believe we default for a day, maybe two. But soon after, they'll fix it and the market will reverse. But the default will be a black swan event because that will be the first time. And that'll be on someone's watch, but that should be exciting. And going into May, and they're now already talking about extending it, and I don't know. We'll see what happens. But here's the major levels one more time: 4,200. Good news, you get through it. And then you have the downside, multiple levels. But I'm always watching that lower trend line, especially the big trend line. Let's see here, where are we at here? Yeah, I would just stick to the some of these moving averages for now. I'm not seeing anything too big underneath us on the rising trend line. And that's the daily. And look at the stochastics on the daily. Flat, right around 54. That tells you this market is waiting on something. It's not in no rush to get anywhere. The weekly here, that's pretty for the last 5-6 weeks, going all the way out. I mean, it's tough market to navigate, especially with the overhanging news. I wanted to give you a little bit more on that, but again, you flip a coin on how this thing is going to play out with the. A lot of people say they're not going to. This is all posturing and thing, but I could see them trying to push that and saying, all right, let's do a default and see what happens. Cause some fear, and someone will save the day. And we'll experience that, but we know that even a default, that needs to be bought because, the worst case scenario. And I'm calling it today. All right, I want to get this out to you. Day Trading Radio, we broadcast live every day, live on the air at 7:30 in the morning, Monday through Friday, daytradingradio.com. And we'll see you then.